The broadcast is now starting. All attendees are in listen-only mode.
All right. Well, welcome to the session. We are about 4 minutes away from going officially live with today's session, but I like to pop in a little bit early and do our mic check and make sure that you can hear me, you can see the screen, you know how to interact. So how about this? If you can hear my voice and you see the screen with yellow lettering that says the successful investor, find your chat box and just type yes. Wherever you see your chat box, just type yes, or you can be like Tim and say yep. Thank you, Peter. Says sounds good. David, Rick, Gerald, Raj, Justin, John, David, Iran, Doug, Darren. Thank you, all of you. Perfect. By the way, if you're on the GoToWebinar platform, you'll see a tool that looks like this. So if you did not say hi to me in the chat, it might be because you don't know where the chat is. So sometimes it minimizes. So look over on the side of your screen and you'll see a little thing that looks like this. Just look for that little orange nub, a little orange arrow. Click on it and you'll see a big box that looks something like this. And then you could type in a little note. This is a live session. You've got me here. My name is Brian D'Amico. You've got my teammates here, Todd Schaefer, John Marabu, all members of VectorVest here to help you out today. So even if I can't see some of the things you type during the webinar, my teammates will be able to see it and get back to you. So you find that box now, and how about this? You just let me know. You can either let me know what time it is by you or what city you're in, because it's almost 6 p.m. here on the east coast of the U.S. I'm in a little north of Charlotte, North Carolina. A little north of Charlotte, North Carolina. It is, like I said, about 6 p.m. on the East Coast. Ronald from Calgary, way over there, huh? And Endry from Seattle as well. A bunch of people on the West Coast. We got Darren from Irvine. Doug's also on the Eastern time zone, 6 p.m. Hey, Jim. Mary from Melbourne, Australia, 9 a.m. Wow, it looks like you got up nice and early for us. I see it. Wow, times are all over the place. We got 8:30 a.m. We had 9 a.m. I didn't know Adelaide was on a half slot. I didn't know that. So we had a bunch of Australians here. Welcome to Jeffrey and Deborah. Great to have you all here. All right, so I think you guys have all found that chat box. We're about 60 seconds away from officially starting, so buckle up, get ready. And now's a good time to get pen, paper, turn off your cell phone, things like that. I'll remind you of that in a little bit as well. But since you are here early, you get to hear it twice. So get something to take notes. We've got a lot to cover today. We're going to be moving at a very quick pace. That way you'll be able to take notes and keep up as best you can. I'm going to get another drink of my water so we are ready to go. All right. I'm looking at my clock. It is just about time to get going. So hopefully you are as ready as I am. And I'm looking down. We got so much to cover. I don't want to start too early. I'm so anxious. I'm so ready to go. I was about to start before it turned 6 o'clock here on the East Coast. All right. There we go. It just turned 6 o'clock. So let's officially start. Welcome to today's session. This webinar is titled The Successful Investor, as you can see there on the screen. My name is Brian D'Amico. I'm really excited. Like I said, I wanted to start the webinar early. I almost started the webinar early. I'm really excited about this webinar because I am going to be showing you how you could be buying and selling stocks. All right, nothing fancy, right? Just buying and selling stocks. We're not going to get into options trading or heavy-duty tech analysis. We're just going to get into how to buy and sell stocks, all right, in a low-risk way that doesn't take a lot of time. All right, you could outperform the market, consistently just by doing that. All right. In fact, our target is to average 15% a year. Now, some years are going to be better, some years worse. Like there might be a rough year here and there, but over time, we're targeting an average of 15% a year. That doesn't mean you can't do better than that. You'll see some examples of people who are killing it doing these techniques in today's webinar. But that's the target average. All right. That if you just do that, you'll be doubling your money every 5 years. All right. So I'm excited that you're here today because this information I'm going to be sharing with you today has changed my life. I know it's changed lives of tons of people. I hear from them every week. I got an email from somebody last week as well. So things like that really pump me up and just solidify the fact that what I'm going to show you today is going to help you out if you do it. Okay, so you're in the right spot. Now today, before we get into all the main content, I do want to touch on something, and it's what I call the elephant in the room. All right, I want to talk about the elephant in the room, and what I want to bring up is I taught this webinar. The last time I did it like this was way back in March, and if you remember, back in March, the market was in the middle of this 30%, actually 36% drop back when we had the coronavirus thing going on. Right? Even though it's still lingering now, that's the initial shockwave that went through the markets. All right. And at that time, when I was doing that webinar in March, the market had not recovered yet. The market was basically still falling. It was right. If you can get my laser pointer out, it was right in here. The market was falling, and everybody was wondering, man, how is it going to be possible to make 15% a year after the market drops 36%? And at that time, I said, the first thing you need to understand is you should not be letting your portfolio drop 36%. All right. The clients that we work with using the techniques you're going to learn today, all right, were able to minimize their drawdown. Instead of 36, it was only 10. Okay. So if you do that, then it's definitely possible to be making 15% per year or more. Now, I also said at that time that the second reason it's important to minimize losses was because the downturn would end. People didn't believe me at the time. They thought the world was ending, but I said, this is going to end. They always do. And I showed an example of 2018 when the market had dropped 20% at the end of that year. And I said, back then people thought this market was just going to keep falling. There was going to be no bottom to it. I said, instead of following the guidance that you hear about on TV and the gurus out there who tell you to buy and hold, I want you to use techniques that like we teach in this webinar where you're going to minimize your losses, right? Cut them short like that so you don't have to experience that big pullback. And I want you to hear this, so listen carefully. Even though the market will eventually go back up, that does not mean you should buy and hold. Right? Back in 2019, the market did go back up, but you don't want to be spending months and months and even a year just recovering your losses. Right? Instead, here at VectorVest and in today's webinar, we'll talk about making sure you can avoid this big part of the pullback so you can experience the benefits of this. Okay? Now, again, let me illustrate this a different way. I'm no graphics artist, but I snipped out what it would look like if you were able to do that. So instead of having this big pullback and just spending all this time recovering, you can put that there and your portfolio would look like that. Okay? Now, fast forward back to 2020. As expected, the market eventually did stop falling over here, basically right after we taught the webinar, and it started to rise. When you know the strategies we're going to be talking about today, you'll be better than the average investor because the average investor suffers through this, right? You're going to be better than the average investor because the average investor spent the last several months just making back losses. Instead, you're going to be better than that. You're going to be like Ross. He just sent me an email last week. And I'll talk more about him later on, but I'll summarize. He said, hey, Brian, since April, my portfolio is up 33%, right? In today's webinar, you'll learn the things that he did so that you could do the same thing. Okay? If there's one thing I do want you to know, it's until you know how to take control and make money in the stock market for yourself, you're going to be at the mercy of outside forces. And those outside forces are things like, tweets from the president. It could be what the Fed says. It could be elections. You're going to be at the mercy of these outside forces. And since interest rates from the Fed, they're going to be pegged at or basically zero for the years to come. You're not going to make any money in bonds and CDs and savings accounts. So you need to know this. All right, you need to be in control. And my promise to you in today's webinar is that you can safely and steadily grow your portfolio every year without taking unnecessary risk. All right, and with confidence that you know how to, when to buy and when to sell. All right, write this down and underline it. It's that your system determines your success. Our webinar today is built on that system of when to buy, what to buy, and when to sell. That's the flow of today's webinar. Okay, so if you're good now, you're going to get even better. If you're unsuccessful now, you'll be able to turn that around and become successful. Sound good? All right. So again, my name is Brian D'Amico. I'm the one on the right with the red shirt on. That was about 5 years ago when my wife and I were on a cruise celebrating our 15-year anniversary. We were about to take our 20-year anniversary cruise this summer, but for some reason they decided to cancel all cruises. So we did not get to celebrate our 20-year wedding anniversary like that. But if you want to put a face to a name, that's me on the right-hand side. I've been working here at VectorVest for about 19 years, actually over 19 years now. And I think over my investing life, I think I've made all the costly mistakes. And knowing those costly mistakes, I wanted to show you how to fix them. So I know the things that work consistently. And my goal today is to show you how to fix that. So we're going to be looking at the exact criteria for you to pick the right stocks to buy. That way you're not wondering what to pick. We're going to look at 3 keys to on what to buy, right? 3 keys to buy at the right time. So you're going to know the criteria to pick in the first section. Then we're going to look at 3 keys to buy those stocks at the right time. And then the all-important, when to sell them. Okay? So today's webinar is built on results, not just back tests or hypothetical mumbo jumbo. It's actually built on real results that real people are getting. So you can feel confident that what I'm showing you is actually working and real people are doing it. Some of the people we're going to look at today, in addition to Ross, who I talked about earlier, we'll talk about what Tim is doing. He went from trading in the dark to where he was on target to make 30%. All right, so we're going to be looking at the system that he's using. We're going to be looking at what Kamel is doing, where he went from where his trading he felt was stupid and undisciplined to where he turned things around and he made he has one of his portfolios up 22%. All right, in 2019, we'll take a look at what he's doing. Rick, who went from feeling helpless and hopeless to where he's in control and confident. And in fact, 1 month after learning what you're learning today, he was able to increase his portfolio by 11.5%. All right, and then lastly, Carol, she was able to fire her money manager. I loved it when she said that to me. She hired herself, and she's doing 8 times better. All right, so I mentioned this for those of you who were here early. Now's a great time, if you haven't done it already, to turn your phone off, close your door, and don't multitask, close your email, things like that. All right, just be really focused. You don't want to miss anything, okay? This webinar is also interactive, all right? It is live. It is interactive. So if I ask you a question, please chat to us in the chat box. I've got myself watching it, my teammates watching it. So if I don't answer you directly, my teammates will try to answer you in the chat box. So interact with us throughout the webinar. The other thing is, I promise I'm going to give you everything I can. Today's session was booked for about 1 hour and 10 minutes, I believe. So we've got a lot of content to cover today. Hopefully you booked 1 hour and 10 minutes in your calendar. And that way you don't leave after 1 hour before we even finish. So that's about how long we'll go. There's only so much we can cover in that time frame. So what I'll do is at the end, if you want more help getting your investing to the levels that we're looking at today, I'll point you in the right direction. Okay? I'll show you how to do that. So if you're good with all that and you're as excited as I am and you're ready to go to jump in to talk about how to pick the right stock, give me one more yes in the chat box to let me know that you're ready to go. While you do that, I'm grabbing a drink. Oh, thanks, Doug, Pablo, Nelson, Mary. All right, let's kick things off. How to pick the right stocks. We've got to talk about this first because, a lot of people just go out there and just start buying stocks. So let's talk about how to pick the right ones. Because just because the stock might be well known doesn't mean you should be the one who owns it today. There is a right way and a wrong way to choose your stocks. Okay. Now, I do want to mention this because a lot of people ask, Todd and I do coaching every Thursday with our clients, and we focus on one technique. And this webinar that you're in right now will focus on one technique. There are other ways to invest. We're not saying that this is the only way to be successful. There are other ways that people invest, like swing trading, option trading. There's a lot of different things you could do. We have a philosophy of, if you're not successful, you should focus on one thing, right? Like Bruce Lee, he feared the person who practiced one kick 10,000 times, right? Not the person who practiced 10,000 kicks once. So you're going to focus on one thing, get good at it, and then you can branch out. Okay? So let's focus on one technique here today. We're going to start off by talking about how to pick your stocks. So here's an example of a stock you might think is good to buy. Now, I zoomed in quite a bit. You only look at about a week or two, and the stock is going up, and you're like, oh, let me buy it, right? So after you buy it, what tends to happen a lot of times? It either goes nowhere or it falls, right? And you're left wondering, what on earth just happened? I mean, you probably thought you did everything right, but it didn't work out. So let's talk about the problems first. All right, let's talk about the problems that cause this to happen, and then we're going to talk solutions. Right? So problem number one that causes your stocks to drop after you buy them is most likely you probably bought a stock that was already going down, and that's why it continued to go down. Okay, so what you're looking at here is just a longer time frame. I zoomed out. Okay, I show this to you because a lot of investors have been trained to buy stocks that look like this. You might hear about it on TV, or you might have had an advisor say, ooh, this is so juicy. Look at this. We can get in low and let's ride this thing back up. Well, stocks that are going down typically continue to fall. All right, and we'll talk more about this as we go on, but I just want you to understand now, if you're buying stocks that are going down, a lot of times they will continue to go down after you buy them, so don't be surprised. All right, so problem number one is you're buying stocks that are going down. Problem number two is you buy just for the dividend. Okay? Now, my co-coach, Todd, who's with us tonight, he and I hear this a lot during our weekly coachings that we do with our clients. And they'll come to the session and they'll ask us to take a look at a stock, whether they own it or they were thinking about it. And they say, take a look at this. And we'll say, oh, well, the stock's going down. And they'll say, well, but it pays such a nice dividend. Okay? And I'll say this, dividends are good, but I want you to think of dividends as a nice little bonus, right? Don't focus solely on the dividends, at least for this technique that we're focusing on today, which we've been calling successful investing technique, right? If you focus just on the dividend, right? If you're just buying a stock because it pays a nice dividend and you're not looking at anything else, you could really be setting yourself up for failure. Because what happens a lot of times is when people do that, they might look for like a 3% yield, and then they say, oh, well, this stock, it just dropped 10%, but I got to stick in because the dividend is getting, it's going ex-dividend tomorrow. Or the stock is down 20, 30, 40%. Oh, but it pays a dividend. All right? And even the example I'm showing here is a stock that had an 11% yield. It probably has such a nice yield because the stock's price is dropping, and the yield is a reflection of also not just the dividend, but the price. But an 11% yield, this stock actually dropped 62%. And the main point is, if you're making a trade-off where you lose 60% to make a 10% yield, or you lose 30% to make a 3% yield, you will never consistently grow your account over time, and you will never outperform the market. Problem number three is you buy just for the company's name. Right now, if you listen to the news, over the last few months, you would think that only 5 stocks existed on the planet. Like, all you hear about is Google, Apple, Facebook, right? You hear about those companies, and that's all that's really in the news. Okay? Well, yeah, I'm not saying those companies are bad and you should never own them, but there's a time to buy them. We'll talk about the time to buy them, and we'll just give you the criteria of what you should be looking for if you do choose one of them. Now, I'm showing you a picture of Windstream here. That used to be my phone and internet provider, and they're actually laying, I think it's like fiber optic cable underground or something outside my house today. All right. So the company is still around, but that's how a lot of people invest. They invest in companies that they know about or they do business with. But just because a company is well known doesn't mean it's the right stock for you to own right now. Those are the three big problems. But the real problem is you have no buying criteria. Okay? When you have no buying criteria, you're left saying things like, what should I be looking for? Like you don't know what really to look for. And if you don't know what to look for, the market will give you plenty to look at. Okay? When you don't know what to look for, the market will give you plenty to look at. And you will get buried. And you will spend hours. Now, people we talk to don't mind spending time on their portfolio. But when you're wasting time, spending hours and feeling like you're getting nowhere, that's a problem. Because if you don't know what to look for, you could be like me when I went to the store and my wife told me to buy a pineapple. I picked one out of the bin. I said I got one and I thought it was good. She said it's not because I didn't sniff the bottom or it whatever. There's some criteria for a pineapple, right? But I thought I picked the right one. You could be the same way with your stocks. Right? You could be the same way with your stocks. You pick one, you thought it was good, but it wasn't because you didn't have the right buying criteria. Okay? The result, when you don't have the right buying criteria, is you end up buying stocks and holding on to bad trades too long. You start saying things like, I can't be wrong. Right? Like I was with the pineapple. You say, oh, honey, I'm right. I picked a good pineapple. Right? You'll say, I can't be wrong. I did everything right. And then as it falls, you'll say, well, it'll come back. Because you keep telling yourself that you did something right. So you need to have the right buying criteria. So let's talk about it right now. I want you to draw it out with me. I like to look at it as a triangle because a triangle has three sides and there's three criteria. So it's quick for you to draw, just a triangle. On one side of the triangle, the one criteria is we're going to look at earnings. On another thing, we're going to look at safety. And another thing is going to be trend, price trend. So out of the earnings side, we're going to look at two things. We're going to make sure that earnings is rising and not just rising, but positive. Yes, earnings, it's good if it's getting less and less negative, but I want you to be picky and pick stocks where the company has rising earnings and positive earnings. Okay? So, by the way, after we draw this out, we're actually going to go through examples. We're going to look at stock charts. In addition to earnings, we're going to be looking at safety, and I want you to start by looking at a 1-year chart, but then go out 3 years and 5 years, and if possible, you can go a little bit longer than that, but definitely 1, 3, 5. Okay? And second, you want to favor stocks that are undervalued. One of the reasons we're doing going 1, 3, 5 and looking out that far is that way you can get an idea of history. Because in history, if you see that, the old saying, what you see in the past is most likely going to happen in the future. Well, what you see throughout history of a stock will help give you a pretty good judgment of what it's going to be like in the future. Okay? So we're looking for volatility. We're looking for earnings performance over that time. Don't just look at a 3-month chart and make your decision on that. That's not the type of trading or investing we're doing with this technique. And then third, we're looking at price trend. You want the price to be smooth and steady. All right? You don't want to see a lot of volatility, and you want it to be smooth and steady going up. The way that you do that is you look for higher highs and higher lows. And if I get my pen out, basically you want it to be smooth and steady, but you don't want it just to be smooth and steady going sideways. You want it to be smooth and steady going higher. And the way you see that is higher highs, higher lows. That's the definition of uptrend. All right, so let's look at this on a graph. This example, and all the examples I'm going to show you, we're going to use a 5-year chart just to save some time. That way we're not looking at 1 year and then I got to show you a whole nother chart of 3 and a whole nother chart of 5. I'm just going to show you 5 all at once. So remember, what you see in the past is most likely what you're going to get in the future. Okay, so here you can see smooth and steady, and the way that'll help you with this is try to look for, if you remember your math days, something like a 45-degree angle. And you notice how the price line hugs it. Sometimes it's above, sometimes it's below, but it stays pretty close to that. All right, so smooth and steady. We don't want something that's going like this, right? Because that will give you heartburn. And that's not the sleep at night factor that we're looking for. You want to be able to put your head on your pillow at night and sleep because you feel pretty confident that the stock is going to go higher, all right, without a lot of volatility. All right, the other thing I want you to look at is that these stocks, they will still have their ups and downs. They are not straight up. All right, they still have their ups and downs. But if we break this up into I'm going to do my best here, 1-year segments, each 1-year segment, it ends higher than it began. Okay, so when it does that, it gives you confidence that if you buy it, whenever you buy it, a year later, and I'm not saying that you're going to hold on to a stock for a year, but you want the potential, the probability that the stock will most likely go higher over time. Okay? Now, later on in this webinar, we're going to look at when you should buy these stocks, like the day that you should buy them. Right now, we're just focusing on what the stock looks like for you to add it to your shopping list of things that you could possibly buy. Now, the other thing we're going to look at, that you should look at, is earnings. Now, remember, you want to make sure the company's earnings are rising and what? Positive. Okay? I want you to think of earnings as the engine. Earnings is the engine that drives stock prices higher. Okay? Now, I work for a company called VectorVest, and that's why you'll see me using a VectorVest graph. You see that up there, VectorVest graph? I like to use VectorVest because one of the main reasons is because of the earnings component that it has. See here, EPS? That's VectorVest's formula for, it's a 12-month forecasted earnings. So all I have to do is look for VectorVest's earnings formula for the blue line to be going higher, like that. Now, if you don't use VectorVest, and I think there's a handful of you out there who don't use VectorVest, that's fine. I'd prefer that you did. I've been working here for 19 years. I think it's a really good service. But let's say you didn't. You could still find earnings data out there. You'll spend a little bit more of your time digging through it, like through Yahoo Finance or your broker or wherever. That's why I like to use VectorVest earnings data, okay? But when you look, what you want to look for is just earnings rising steadily over time and to be positive. Okay? So when you have these things working together, price and earnings and all the things in that checklist, it really starts to build that confidence that you picked a good stock. Okay? It really starts to build that confidence that you picked a good stock. Now, you remember that stock we looked at earlier, Windstream? Now, I use this example, even though the example is several years ago. I use it because in one example, it highlights so many different concepts, all in one example. I don't have to be flipping to different examples over and over. One stock from one person highlighted so many examples, so I just keep using it. But we hear about these things every week in our Thursday coaching that we do. I just keep using the same example because it highlights all those things in one example. Now, this was a real example from a gentleman named Steve. He came to our coaching session, and when he first came to us, he went through the training. Actually, after he went to the coaching session, he eventually went through the training, but on one of his first coaching sessions that he came to, he shared this with us, and he typed into the chat box, "Hey guys, what do you think about Windstream? I just bought it 2 days ago." And so what we did is we looked at the stock and we're like, oh dear, he just bought it. He bought on the last green candle and it's done nothing but fall. So I'm sure you've been in that position, right? I know I have, where you buy a stock and right after you buy it, it falls. That's what Steve is thinking about. And so we said, all right, Steve, let's put it through the checklist. And we're like, oh dear. Steve, this stock is hitting lower highs and lower lows. It's in downtrend. Its earnings is falling. And we haven't looked at this yet, but VectorVest has a calculation for value, and price is over its value. So it met none of the checklist. And we had to tell Steve that. We said, hey, Steve, this meets none of the checklist. So what he did is he made a decision right then. He's like, all right, I'm selling it now. Now, of course, we can't tell him to sell it. He made that decision, but it was a good thing he did because it dropped another 10% in the next couple of weeks. It dropped another like 60% over the next few months. I looked at it not that long ago. The company went bankrupt, right? It filed for bankruptcy. It's actually still around, but it filed for bankruptcy and the stock was trading at 20 cents. So you don't want to be in that position because imagine if he didn't sell it. Because if he didn't sell it, on each of these little up waves, what happens to your emotions? You get so hopeful, only to have your hopes crushed. You get hopeful, crushed. Crushed. And then what happens? You're then holding on to this stock for, it seems like, the rest of your life. Okay? And there's an emotional component, right? Every time you open up your portfolio, you see this thing and you're like, man, I stink at investing. You don't want that. All right, so let's do some preventative measures so that you can have things like this occur in your portfolio. When you follow the checklist, these things will happen for you. These are examples from the portfolio that Todd and I track each Thursday with our clients. It doesn't matter the ticker symbol, right? It doesn't matter the ticker symbol. What I want you to pay attention to is, hey, look, smooth, steady price, rising earnings, right? So when you combine that with the right entry and exit rules, which we'll talk about next, we got a 25% gain in a month, right? A month and a half. Okay. Here's another one. Now, this one is an interesting example. Okay. This is an interesting example because we bought this one during the rally after the coronavirus sell-off, right? This is a technique that we call prudent bottom fishing. Prudent bottom fishing. Now, bottom fishing is where you buy stocks that are, hitting a bottom, but are rising up off the bottom. We call it prudent bottom fishing because we're using the same techniques of the same buying checklist of finding good stocks that were beaten down, and you buy it on its way back up. Okay? Now, I did not talk about this a moment ago when you remember earlier I was drawing that 45-degree line? One thing I do want to point out is that if you look at like a 3 or a 5-year chart and you see a big pullback like this, there are times when you can give the stock a pass because every other stock out there did the same thing. So this happened during the coronavirus. I did it again. Coronavirus crash, right? Every stock did that. So you give a good stock like this a pass. And when it starts to go back up, that's when you get in. We'll talk about when to buy a little bit later on. Okay? And then, here's another example. Now, this is a stock everybody probably knows. It's Lowe's, right? But again, we found this using the techniques in VectorVest that give us a very easy way to find these good stocks and smooth, steady price leading into where you buy it. The earnings were actually rising. I didn't show the years worth of data on this slide just so you could see the pattern, see things a little bit better. After it was purchased, it was a three-month hold, 23% gain. All right, following the right entry and exit rules. The point is that there's a ton of stocks out there that meet this criteria. You might know of them like Lowe's. You might not know of them, but they are out there. There are a lot of them. So when it is time to buy, be picky and pick good ones. All right, use the checklist. That's how to consistently grow your account each year. All right, so let's do this. All right, I'm going to show you a handful of charts. All right, and what I want you to do is I'm not going to give you a long time to look at each one. All right, I want on a piece of paper, draw out 3 columns on a piece of paper. Have a column for yes, have a column for no, and a maybe. So the yes column is a definite yes. The no is a definite no, and the maybe is a maybe. All right, we're going to look at the charts, make a quick decision. 3 seconds. You should know it in your gut. I'm going to show you a 5-year chart. Would this be a stock you want to add to your shopping list? I'm not saying that you would buy it that day, but is this a stock based on this 5-year chart that you would love and be proud of in your portfolio? Yes, no, maybe. And you can share with me in the chat like Tim and Lamont and Dennis have done. Yeah, I started with an easy one. Thank you all. Everybody said no. Great. I wanted to start with an easy one. How about this one? Is this a stock that you would feel comfortable putting into a shopping list and thinking about buying? Remember, this is 5 years, so like that's 1, 2, 3, 4, 5. Yeah, I see a mixture, a lot of no's. I see a couple of yeses. This one, let me change my ink color to white. There we go. Whoops. This is a no, and I'll tell you why. Because this right here is not just a couple of weeks or a couple of hours, right? This is almost a couple of years. This stock is in downtrend for years. Even though earnings is good, you want to avoid something like that. This is not prudent bottom fishing. This is not prudent bottom fishing because it is not going back up. Okay? So you don't want a stock that's going down for a couple of years because guess what? Remember, I told you to be picky. You will find stocks like this. I bet you probably are putting this in the yes column, right? Yeah, my chat box is filling with yeses. Earnings looks gorgeous. Price for 5 years is going up. This right here is during a time period when every stock out there pulled back. Yeah, I see Gary says beauty. Yes, you will find stocks like this. So why would you even think about something like that when there's something like that? All right. Now this example, earnings is beautiful, right? What do you think? Yes, no, maybe? I see a bunch of yeses. I see a maybe come in. Yeah, we'll talk more about this in the next section. But this one is right near an area of what we call, not what we call, but the industry calls resistance. So this one, it would definitely be like a maybe, keep an eye on for later, but not like a right now thing. This one, I want to point out with this. This one is not as pretty as the one we looked at a couple of examples ago, but earnings looks great. Now, if you don't like it, you could skip it. The thing I want to point out is this. You see this? This is a pullback. So today is not the day to buy it because it's pulling back. But that is different than a 2-year pullback, okay? You will find stocks like this, and I'm going to go faster through the rest of them because you'll find a definite yes like this. Definite yes. Definite yes. This is at best a maybe. But when you compare this to stocks like this, you would see this and be like, ugh, well, I'm not going to get in this now. I'm definitely not going to get into this, right? Because I'm going to find stocks that look like this. You might think this is the same stock I showed you a moment ago, but it's not. All right, so the one other point I want to make here, you remember you had the yes, no, maybe column? Right, you did that a moment ago. Here's a quick exercise for you. Take this M, cross it out, and write no. This is a huge point. You should never buy a stock you feel maybe about. Ever. You should be 100% confident in the stocks that you buy. Because if after you buy it and the stock starts to go against you, you don't want to be in a position like, oh man, I don't think I should have bought it, so I'm just going to sell it. Right? You need to be following rules. Right? You got to be 100% confident that you like the stock you buy. Even if it does not work out and you lose money on that trade, you got to say, you know what? I made the right decision to buy it. It just did not work out. I'm going to follow my rules and sell it. And then move on to the next trade. Okay? Would you be more or less confident using a buying checklist like that, using a system like that? In the chat box, just tell me more or less. You guys are quick. Much more confident, says Nelson. Yeah, more confident. That's what we want. Confidence. A big part of being a successful investor is your confidence. And your confidence will come from a system you believe in because you know it works. All right. Remember Ross from earlier? He sent me an email last week telling me about his journey becoming a successful investor. He had said that he was already an experienced investor, right? It doesn't mean that he was successful. He was experienced, right? Many years under his belt. He had no system though. He spent a lot of money on newsletters. He said what he was doing was haphazard and time consuming, right? He was prone to over trading. He had said that he didn't commit to a strategy and his results were at best average. All right? He was determined to turn things around. So he focused on one technique. Remember earlier, Bruce Lee, we're going to focus on one thing. So he took the training, and in fact, he actually took the more in-depth course that I told you about earlier. And I'll tell you about it at the end of the webinar if you're interested. But he said he did that. He focused on one thing. He committed to following the system. He built a diversified portfolio filled with stocks that we talked about today, met the buying checklist. Since he started the successful investor system, he said his portfolio was up 30% just from April to October. All right? And he only spends 15 to 30 minutes a night. And he ended his email by saying that he's far more confident now and he's relaxed because he knows what to do and when. He says investing is more fun and less complicated. Okay? Now, he also said he's got his dream trip to Africa planned. So that's another cool benefit of getting things fixed. So I want you to make the shift right now. You know, one of my jobs today as your coach is to help you make a few great decisions. Your first shift is to go from picking stocks that you're uncertain about because you don't have buying criteria to where you are picking high probability stocks that meet, right? That meet your what's the word I'm looking for? Buying criteria. Okay? That's one part of your system. The way you pick your stocks is one part of your system, and it's needed to help you average 15% per year. Okay? So let's move on to step 2. Let's chug away to step 2. All right. So now that you know what stocks you want to buy, right? You've got to know how to buy them at the right time. All right, because a lot of people have been taught the technique of buy any time, okay? Buy any old time. And that turns into buy and hope, okay? So let's learn how to do it the right way. This is an example, an image of the market over the last year. So this should look very familiar, right? The market was going up into 2019. It pulled back. I'm not even going to try and say the virus. I messed it up twice already. And then it had the recovery, the rally, where the Fed is basically pumping up this market. Here's where we are right now. Look at this. This is, I took this screenshot like a day or so ago. That's where we are. You've got to know what you're going to be doing. You can't be basing your decisions on, the results of a Trump tweet or a Fed decision or what happens with the Supreme Court or the election. You've got to have rules, okay? This market being up and down, if you don't have rules, can drive you batty, okay? If you do that whole buy and hold mentality, you live through a portfolio roller coaster. You don't want that. A roller coaster is slow up, fast down, okay? It's very strenuous on the heart, right? And if you don't have rules, you'll be second guessing yourself, right? Should I get in? Should I not? Right? So let's talk about what's the problem causing the stocks you buy to drop, okay? One is you bought a bad stock. We talked about this earlier. I'm not going to rehash all the things we talked about earlier, but let's just say you picked a bad stock. All right, that's one reason why the stock that you buy goes down. Number 2, maybe you got bad advice. Maybe you weren't confident in your own ability, so you turned to the gurus or the people on TV, like you flip on some of those famous shows on CNBC or something. I know I got a picture of a guy who looks like he's got evil intentions. I'm not saying financial advisors have evil intentions. They probably really do want the best for you, right? They're not bad people, right? But they're just following the advice that they've been taught, which is to just buy and hold stocks, right? Low risk. Like let's buy some really good stocks and just hold on to these things. They're trying to get 1 or 2%. All right? They don't have evil intentions. They just gave you bad advice because that's what they've been taught. All right? Problem number 3 is you feel like you're cursed with bad luck. There's no such thing as bad luck. But if you feel like you are cursed with bad luck, you will cause bad things to happen to you because you do bad things. Right? You think, oh man, I'm cursed. And then you see right after you place a trade, the market goes down and you're like, oh, whatever. This happens again. I'm just going to sell everything. But then 2 weeks later, those same stocks you sold go back up. All right? So you're causing bad things to happen. But again, the real problem is you just got in at a bad time. Most of the time, it's just bad timing. Okay? There's still a right time for you to be buying. All right? And you need clear entry signals that basically say enter here. And that's what I'm going to show you to use. So here's 3 keys to buy at the right time. The first one is going to be the biggest. I shouldn't have started with the most important. I should have led up to that. But let's talk about the most important thing. The most important thing is the market's got to be in an uptrend. All right? A rising tide lifts all boats. All right? The same thing happens with the stock market. If the market's going up, the overall market, it just lifts stocks up. However, if you continue to buy stocks as the market is falling, the results can be disastrous. Now, maybe you've experienced something bad this year when the collapse happened, right? And you were staring at a 40% loss in your portfolio, and you went into cash, and then you didn't experience the uptrend, right? That's kind of what happened to Robert, except it happened to him back during the other financial crisis, right? And he had a financial advisor at the time who told him, hey, let's ride this out. They basically kept buying and selling and buying and selling throughout the pullback, and he ended up losing 40% of his retirement. You don't want that. Here's a look at 20 years of the market. The main thing I'm trying to get across by showing you this is you've got to understand there are trends in the market. Those people who tell you that you can't time the market and that the market doesn't have trends and you should just buy and hold, well, yeah, it looks like the market does go up. But wouldn't you agree there are trends? There's these long-term trends like this that if you could remember earlier, we were talking about trying to avoid those and minimize losses. There's a right time to buy and a wrong time to buy. There's a time not to buy, right? The one thing I do want you to understand, well, not the one thing, but one of the things I want you to understand is when I say that, I don't want you to try and nail the bottoms. Because when you try to nail market bottoms, you know what that causes? It causes you to buy here, buy here, buy here, buy here, buy here, because you keep trying to nail the bottom. And you've lost so much money, then you're sitting there at the bottom. Advisors will say, hey, that's a good strategy. You just dollar cost averaged on the way down. Why don't we just avoid that and just not buy through here and don't try to nail the bottom, but once you get signals to buy, just hop onto that uptrend and be buying as the market goes higher. All right? So here's a look at the current market. This is the past year. And you might say, well, how could I do it? Well, if you don't use a system like VectorVest, I'm going to show you what VectorVest has. You're stuck with using things like moving averages, which can be okay, but it doesn't give a daily signal, like a daily signal saying yes, buy today, no tomorrow, right? So you need I personally believe, and here at VectorVest we believe you need something that gives you a daily signal. And here at VectorVest, we use a thing called green lights. And I'm going to show them here on the chart. On the chart, you can see these little green arrows. They represent when VectorVest issued a green light. What you should notice is green lights up here primarily during uptrends of the market, right? So you get green arrows, green lights. It tells you, hey, it's okay to be buying as long as the market continues to go higher the next day. What do you notice here? In this little down wave, I don't really see, if I try to match this up, green arrows. This one is the obvious one. What don't you see throughout the whole coronavirus collapse? I don't see a single green. You would not have been buying anything during that time. That means you were ready like a puma to buy when you started getting these green arrows and take advantage of that explosive up move. All right. So there is a right time to buy and a time not to buy. All right. The biggest thing is the market needs to be in an uptrend. Number 2, the second key is the stock needs to be in an uptrend. Now, we did talk about this earlier. You want to make sure that the stock that you're buying is already in an uptrend before you buy it. Remember Steve from earlier. He bought Windstream. I told you this gives so many teaching points in this one stock. He bought this stock. He thought it was in uptrend because he saw this. He saw the price going higher. But if you, in just a 1-year chart, you could see, and this is something that we also talked to Steve about, is this stock lower highs, lower lows. And in fact, we said to Steve, hey, Steve, this stock it looks like it's bouncing off of a downtrend line. That's not good. All right. So you want to buy stocks that are hitting higher highs and higher lows. All right. The other reason why you want to do that is because when we talk about in the next section when to sell your stock, you have stocks hitting higher highs, higher lows, and then when you see a stock have a higher high and now a lower high and a lower low, your red flags should be going up. Like, number 1, definitely don't buy it. Number 2, if you own it, you're tightening stops, you're becoming defensive because that stock, it doesn't look like a lot here, but it went from about 35 down to 27. That's a pretty big pullback. You could avoid that. All right, and we'll talk more about that in the next section. All right, we're talking about here when to be buying stocks. All right, and the third thing is to make sure your stocks are clear of resistance. Okay, if they are not clear of resistance, there is a good chance your stock will fall right back down. Okay, so if you're not familiar, there is this thing called support and resistance. Okay? Support and resistance does not come into play 100% of the time you're thinking about buying a stock. Right? But if you happen to see it, right, you've got to know what you are looking at. All right? Because we want to buy stocks. We want stocks to be doing what you see here. You see here in this picture? It's busting up through the ceiling. All right, if I get my laser pointer back out, it's busting up through the ceiling. That's what you want your stocks to be doing. If they don't, there's a thing called resistance. If it hits the ceiling and starts to pull back, that is not good. If it is near the ceiling, you want to avoid that and wait. Okay, here's an example of CNC. Let me get my pen back out. This stock, looked great. Price was going higher. Price is going higher. Fairly smooth, right? It topped and pulled back. All right, it pulled back. So, if you're thinking about prudent bottom fishing, the stock started to go back higher. If you didn't see it until this day here, you're thinking, all right, well, do I buy it? Is this a prudent bottom fishing time? The answer is no. Why is the answer no? Well, look at where it is. It's right here at an area of resistance. All right. People who watch stocks drop after they buy them will buy stocks near resistance. And if you're unfamiliar with what's going on at an area of resistance, I want you to think about it this way. All of the people who bought back, who let's just say they didn't sell the stock back here and they watched their stock drop. They're just thinking to themselves, oh man, if this stock ever gets back up to where it was before, I promise I will sell it. And they're like, they're just praying that the stock goes back up. Well, once it goes back up and it gets back up to that level, there's so much selling pressure here. A lot of times it can't overcome it like this stock couldn't, and it pulls back down because of all that selling pressure. instead of buying it at resistance, you want to do something like this, where you've got a stock here. This is resistance. This would be an aggressive entry because it's still straddling resistance. It's kind of like, those little gophers where they're sticking their head up out of the hole to see if everything's okay. Instead of doing that, the more prudent thing to do, because you can see here, it kind of hovered around resistance for a while, but then there's a full candle above resistance. That is busting up through. Typically, after it busts up through resistance, there's a nice clear path moving higher. All right, so those are 3 keys to buy at the right time. Now, think to yourself, what percentage of the time have you been making sure to look for all 3? If it's not 100%, it should become 100%. Okay? Kind of like Kamel here. You remember him from earlier? Kamel said he had no discipline in his trading. He would buy falling stocks in down markets and on down days. We call that the trifecta of badness. Well, actually, I just made that up. It's just a bad combination. He would, after doing that, he would just be hoping they would come back. The worst part was that he started to question his ability to continue investing. But once Kamel learned the right system to invest, like we've been talking about today, things turned around for him. He wrote to me. Basically, he would come to our weekly coaching each week. And what he would do, every once in a while, he would email me throughout the year he would actually take a picture of his computer monitor and say, hey, Brian, here's where my portfolio is at now. Right? So this is one picture of his portfolio. And this is, you can see, it's his retirement portfolio. This is for 2019. He was up 22%. Right? Nice and smooth portfolio. That's nice to live through, right? This is a portfolio where, let me just kind of take these drawings off. This one is almost 44%. Now it's a little bit longer. This goes from 2017 until 2019, so that's a few years. But again, another type of his retirement portfolio, smooth and steady. The thing he was trying to tell me about was, he said, Brian, take a look at this. I'm hardly trading this. I did 21 trades. I'm only winning 52% of the time. Right? You could be a 50-50 trader and when you have a good system. Okay? Kamel also said he's not stressing over things. He's not doing stupid stuff anymore, and it's more rewarding, all due to having the right system. All right, so you got to choose whether you want to live the roller coaster life and not have clear entry signals, or use clear entry signals to buy at the right time. Right? That's the only way you can start to average 15% per year. Okay? All right. Number three. All right, a lot of people, wherever you are listening to this, kind of straighten your back, get the blood flowing again, because we got to talk about when to sell. Because now that you know the stocks to buy, when to buy them, the most difficult thing for a lot of people is when to sell. Okay? Because you could have situations like this where you've got a stock that you thought you did everything right. Right? It is at resistance here. It busts up through. It's clear of resistance. You buy it. It goes higher. You've got a winning trade. But what happens after that? What happens? You don't know when to sell it. And that winner turns into a loser. Not just a loser. A lot of times the result is a big loss. Once it becomes a loser, you end up holding on to it, hoping it would come back. And eventually it falls so far that you say, well, I might as well hold it now. And when you suffer through things like this, it is hard to recover losses like that. And you start to feel like a failure. Right? You don't even want to open your portfolio. You are praying that your wife doesn't ask you how the portfolio is doing, because you just feel like an utter failure. And you're thinking, why can't I get this right? Why can't I be successful at investing when, I was really good at my job. I excelled at work. You don't want to feel like a failure. To fix that, you need to know your exits, right? you need to know your exits. Just like when you get on a plane, they tell you how to get off the plane before you even go anywhere. Okay? So here are some things to understand. All of this gets worked out before you even buy the stock. And so we're going to talk about a couple of things here. First off, draw a little diamond. You're planning the trade out. So you're going to say, all right, well, if this is going to be my entry price, this is my stop down here. And with these type of stocks, we like to give them room to breathe. We use either like a 40-day moving average, or if you use VectorVest, we use VectorVest has a calculation for a stop price. All right. You're also planning things out, and you're saying, all right, well, this is going to be my profit objective, not a target, but an objective. And a good rule of thumb is if you're going to let a stock drop, let's say $1, your objective should be to make about 2. If you're going to let it drop 5, your objective should be to make about 10. That is how you could still be a 50-50 trader and make money. All right? Remember Kamel from earlier. He was a 52% trader, and he was still killing it. All right? You do that because you know when to sell. All right? So in the time we've got today, in that earlier I mentioned we have a full course. We actually, in the full course, spend about an hour talking about when to sell. In the time we've got, let me give you the 2 biggest things that you need to understand. Okay? First, you want to make sure that you set your line in the sand. All right? So if it hits that line in the sand, you are out of the trade no matter what. No ifs, ands, or buts. So you got to have a line in the sand. Second, never give back half your gains. Okay? Never give back half your gains. And when you're up around 10%, you should definitely walk away from that trade if it pulls back to like 5. We'll talk more about that in a second. So here are some examples from our portfolio to illustrate those points. Here's UVE. It looked gorgeous. We were so happy, right? Beautiful looking price chart. It was, basing here, had a full candle above resistance. Earnings was rising. We were excited about buying it. So we planned out the trade. We said, here's our entry. Here's our line in the sand. Our profit objective was up higher. I couldn't fit it on the screen. Okay. We thought it was going to go higher, right? That was our plan, but it didn't work out. We bought it over here. It did go higher for a couple of days, but it started to pull back. It hit our line in the sand, and we exited. Okay? But, the stock turned around, and in fact, the whole market turned around on us. We had to exit the trade. When you have rules in place, you can do that unemotionally. All right? So we took a 10% loss. Okay? A 10% loss is a whole lot better than a loss that looks like this, than holding on to that trade, suffering a huge loss. Having a line in the sand will protect you from suffering those large losses which can kill your portfolio. Here's another example. IIN. Not II Captain, just IIN. It's one we traded a couple of times. We entered here, exited here. Why did we exit there? Well, we gave back half of our gains. We walked away with a 17% gain. So in a couple of days, we watched 30-something percent gain go down to 17. We exited. Okay? So we gave back half our gains. And now when we tell people this, they say, well, why'd you exit? It went higher after you sold it. Yeah, well, you don't know that that's going to happen. But it did. And we did it. We did get back in when the market and the stock were still telling us it's okay. We made another almost 9%. We sold it because we gave back half of our gains. All right. So in one day, the stock, we were up about 18%. It pulled back. We got out. All right. So you might be thinking, well, why'd you sell it? The last time it went higher after you sold it. Well, because sometimes this happens. Okay. Sometimes that happens. Okay. Knowing when to sell allows you to lock in gains and minimize losses. All right. Tim, that was one of his big learnings. All right. Tim took the full course that I talked to you about earlier. After he did, he wrote me a note saying he was on target to do 30% that year. All right. Tim said prior to learning the system, he would buy what he thought were good stocks and hold them for as long as he could. But he never knew when they were losing momentum. And he said it was like trading in the dark. As a result, he would hold on to trades too long and watch the stock go down. He then waited too long for them to come back, and they never did. After only about 6 months, he said he was on pace to make 30% that year. He said he had the ability to make informed decisions on his positions. He set his stops on Sunday, once a week, and he always had a shopping list ready in case he needed to buy a replacement. He said emotionally he feels like he's got a better ability to know what is happening in the overall market, and he can sleep better at night. All right? So you got to ask yourself right now, do you know when you're going to sell your stocks? If the answer is no, you've got to at least start by putting a line in the sand. All right? So I want you to make a decision right now. Here's a shift. Make a shift right now from not knowing when to sell and suffering large losses, okay, to where you set up the trade the right way from the beginning and know where to set your stop so you minimize your losses. This is critical. Write that down. Knowing when to sell is just another part of your system, and it must be done prior to entering any trade. That's how you start to average 15% per year. And it's your system. We looked at the system today, the 3 main parts. So let me summarize your system into a checklist. This is how you can grade yourself. I'm going to go through this very quickly. All right? Just give yourself like a yes or a check if you meet these items. Number 1, does your market signal reliably tell you the market's in an uptrend? Yes or no? Don't overthink it. Are you finding safe stocks rising in price with rising earnings? Right? Do you have a way to do that right now? Like if I were to say, go find me these stocks, do you have an easy way to do it? Number 3, how long does it take you? Right? Are you using your time wisely? Does it take you too long? Do you know how to use stop prices to lock in gains? Not just the 2 things we talk about today, but do you know how to use stop prices? And number 5, are your stops helping you to protect profits and minimize losses? So those are 5 things to judge yourself on really quick. Judge yourself on those 5 things right now. All right? And I want to ask you this. What did you just learn about your investing system? What did you just learn? You can share with me in the chat box. What did you just learn? Wow, Justin, you're very, very honest. Justin's like, I learned that it sucks. Doug says, I don't have one. Yeah, you might find that. You might find, well, it's okay. I just need to do a couple of things. All right, so wherever you are, you got to go from having no system and shift to using a system. And I told you about Rick earlier. That's what Rick did, right? He went from investing on his own but losing a bunch. He didn't know what to buy, when to buy, or when to sell. Like he had no system. He tried mutual funds, ended up right back where he started. Right? He felt helpless and hopeless. After learning the system, like you started to learn today, and he actually took the full course, he knows how to find stocks and what to look for. He knows when to sell them and how to set his stops. And in the first month, right after he learned it, the market was in his favor, and he made 11.5%. He's got confidence now. That's huge, having confidence. And if you remember, way back at the very beginning, I promised I was going to give you everything I could for about an hour, right? That's all we had time for today. And at the end, I was going to tell you where to go to get more help. All right, I'd really like to do that now because as you've seen, without the right system, you've probably been buying stocks that you thought were good only to see them drop. And it's felt like that you're trading in the dark. You don't know which stocks are good, when to buy them, and especially when to sell them. And you feel like your account's going nowhere. All right, maybe it's just not growing as fast as you want. Today, we outline the basics of a system that you can use. And when you have that system working for you, you'll know the right time to buy, what stocks you'll buy, and when to sell them. All right? So that way you can start to feel confident in yourself and have the ability to be self-sufficient. All right? And you know you're able to live a comfortable life and provide for the people you love. So the obvious question you have right now is, what do I do next? What's the best way to install this type of system in my portfolio? Well, you have a choice to make. Option 1 is you try to do it on your own. Right? Learn by trial and error and you're in the same place this time next year, right? Not getting the results you want financially or emotionally. Or number two is you 100% commit to learning the system to become a successful, confident investor right now. All right, so you can see the results to grow your account. All right, so if you're ready to do this, the full system that I mentioned a few times in today's webinar is taught in a course that we put together called The Successful Investor. All right, it's designed to take you step by step through the system that you need to safely and steadily grow your portfolio. Now, VectorVest offers a quick start course, which is different than this. The outcome, it's a complete course, six modules, which I'll explain in just a minute. All right. Before I tell you all about the course and everything that you get, all the bonuses and everything, I want to say one thing. The course is only for dedicated people who take their investing seriously and are willing to put in the time to learn the system. All right. So if you're not serious, if you're not committed, or if you're someone out there who's just kind of looking for some magic pill where you're going to become a millionaire and you don't have to do anything, it's not for you. You should probably log out now. All right. This is for serious people who take their investing seriously, who are willing to put the time in to learn the system. We respect your time and your money and only want people to take this course who take it as seriously as we do. By learning the system, you could be just like the people who have taken it and who shared this with me in our coaching group. I asked them at the beginning of the year, every week we get together with our clients and we say, well, what have your wins been like? What have your wins been like? Just on a weekly basis. And I was shocked, that so many people at the beginning of the year, instead of telling me what their wins were like that week, they told me how things have changed for them over the past year. Here we had, Wayne. Wayne said, big thanks to Brian, Todd, and Stan for their continued guidance. Prior to VectorVest, my full service brokerage advice was netting me 5%. Proud to say, in 2019, once I kicked the full service to the curb, my ARR improved to 15%. Over here, Manasher said he made 18%. Mohammed said his U.S. account was up 33%. His Canadian account was up 20%. All right. Down here, Michael said he was up 38% in 2019. He's like, the best year ever for me. All right. I also asked people how things were going after the coronavirus collapse. Now you see here, I asked them on March 19th. I said, what were your wins like this past week? Right after the market had just collapsed, right? And they're like, well, I avoided losses by getting out of all my positions 16 days ago. John was all in cash waiting for the turnaround. Dennis, all in cash. He minimized his losses. Veronica, she bought a put and made a $1,700 profit. Steven, VectorVest got me out of everything on February 24th, and he was only down 10%. These are things that you learn how to do in the course. All right? That's why we put the course together for you. And the easiest way to explain it is I'm going to quickly go through the modules. All right? I'm really just going to go through it really fast. All right? Module number 1, we're going to start with a strategic game plan. All right? The outcome is so that you get clear on your goals and the objectives. That way you know that you're on target. Modules 2, 3, and 4 are when to buy, what to buy, and when to sell. All right? The outcome is you're going to know exactly when you should be buying stocks. All right? You're going to know the market phases and everything. You're going to know what stocks to buy and how to find them quickly, and you're going to know when to sell your stocks. We're going to really go deep on those topics. Module number 5, your game plan. This is not should not be discounted. Like some people don't do this at all. So we had to cover it and show you, all right, how do you size your positions correctly? How do you set up your portfolio? How do you make sure you're diversified? All right. And then we take it to your broker and we say, all right, how do you enter the trades the right way? How do you use entry orders the right way? How do you set your orders to get out of a position? In addition, I'm going to give you a whole bunch of bonuses if you sign up today. But before I do that, understand whatever price I show you in just a second, which is going to be ridiculously low, it's a 100% money back guarantee. 100% money back guarantee. At the end of the course, you can go through the entire thing. And if you say, you know what, I want my money back, we'll give you your money back. 2 bonuses you get. Actually, 2 bonus modules. There's a lot of bonuses. I don't want to spend forever on them, but they're pretty cool bonuses. So you're going to get a bonus module, how to protect and profit in down markets. All right. The outcome of this is you're going to know the exact signs to look for to start to become defensive, how to insure your portfolio against large losses, and how to make money and generate income in down markets. Remember Veronica from a moment ago? She used a put. Now, we're not going to give a step-by-step course on how to trade calls and puts, but we showed what you could do and how to do it, and she was able to make money in a down market by using that put. How to automate your trading plan is bonus module number 2. This is what Kamel used. Remember, he was the gentleman who had a 22% portfolio and a 43% portfolio. He has now gotten to the point, after learning how to do this, that he's able to set his portfolios up on basically autopilot, right? And it runs them for him, and all he has to do is follow the rules and then go to his broker and place the trades. All right. In addition, those of you who are on today's webinar, if you do not have VectorVest right now, we'll give you 60 days of access to it. You'll also get 60 days of access to our high-end product called RoboTrader. So any of you on this webinar who do not have RoboTrader right now, you'll get it for 60 days. Here's a big one. You're going to be invited to 6 live sessions. So the course itself is a recorded course. You will have access to the entire course immediately upon signing up. All right? Todd and I will get together with you live for 6 weeks, right? Every Wednesday, we're going to get together, and we're going to make sure that you are on track and you know how to implement the techniques that are taught. Plus, I didn't put it on this slide, but you're also going to be included in our weekly coaching on Thursdays. So think about that. You're going to get 2 live sessions with me and Todd every single week. Plus, you'll be able to access our portfolio. When you come to that Thursday session, you'll be able to see what we're doing and why we're doing it. Total value of all these things over $1,900. All right. So you're saying, all right, well, what does this cost? You're going to charge me like $2,000 or $1,000 or $500? Well, we probably should charge one of those. All right. Because the results you get are life-changing. But we want you to be able to enroll today and start getting results right away. Okay. Is it worth those prices? Yes, definitely. Right? Normally, we sell it for $495 all year round. Right? 6 months from now, you could get it for $495, but you don't get a lot of the bonuses that we just talked about. Today, I'm going to show you a special price, but I'm also going to give you a price that if you buy it while we're on the webinar, you get an even lower price. Special price is $295. All right? That's for the next few days. You can get it for $295. But if you order before the end of the webinar, instead of the $295, you can get it for another $50 off, $245. I'm going to ask that either John or Todd type the link in the chat box, www.vectorvest.com/TSIC. All right. If you go there now, you will see the discount. That is even lower than our elite pricing. Now, I see people in the chat box have already some people have already taken the course and they want to know if they can take it again. Yes. Yes, you definitely can. And if you're an alumni of this course specifically, you can get it for $95. All right, and you can do it all over again. I don't have a link to give you, though. You have to call. In fact, we actually sent you an email yesterday, and there's a link in that. But if you're an alumni, you get it for $95. If you're not an alumni, you can get it for $245, which is a killer price, by the way, for all the things that you're getting. All right, go to vectorvest.com/TSIC. You have to do that before the webinar ends. Once the webinar ends, it'll go back to $295, and it's only going to stay $295 until Tuesday. Okay? All right, it looks like we typed the link incorrectly in the chat box. Hold on one second. www.vectorvest.com/TSIC. There we go. Sorry about that, folks. There we go. So the link is in the chat box correctly now. All right. I asked a few people who took the course before to tell you what they thought of the course. John said, hey, it'll make you make better trades, reduce your losses, and earn more profits with less time. More efficient and effective than a fly by the seat of your pants method. Richard says the course is great for beginners or people struggling as it gives you a clear front-to-back approach to fix many of the things you might be doing wrong and to learn the right way before you start trading. Richie says, I've taken several other courses and this one is among the easiest to implement and stay on track. Lucine just flat out said, just do it. The benefits are unbelievable on so many levels, financially, emotionally, and psychologically. Danny says, take the course and follow what it tells you. You're not going to regret it if you are serious about being successful. And Robert says, it's an excellent course to take and well worth the money you pay, that you will spend and likely earn enough in your first trades to pay for the course. All right? Think about this. What was your percentage gain over the last 12 months? Like, are you just kind of getting back to where you were before the collapse happened? Maybe you're a little bit higher, or you're like Tim. Are you 30% higher? All right. Maybe think about it this way. Maybe you lost money over the past 12 months. What's been your average gain each year? The key is, what do you want it to be? Are you where you want it to be? And do you have a plan to get there? Ask yourself, what would it cost you not to do this? How much money will you lose in the market? If you keep doing the same thing, you're going to get the same results. Then I want you to just ask yourself, how would your life be different if you do this and it works? What if it works? How would your life be different? Remember, the risk is all ours. We have a 100% money-back guarantee. All right. So again, if you order before the end of the webinar, you get it for $245. Just go to vectorvest.com/TSIC. All right. That is only while we are live on the webinar. After the webinar, it'll go back to $295, and it will only be $295 for the next few days. All right. I see a bunch of people in the chat box already saying that they just ordered. That is fantastic. I'm going to welcome you in just a minute. I do want to cover this common question that I hear where people think, well, I don't have a lot of time to do this. I'm busy. I'm working. I don't know if I can do it myself. To that I say, you remember Carol? Carol was working full time. She was trying to juggle her father's estate because he had just passed away. And she was learning how to do this at the same time. All right? She was frustrated with her money manager because he was only getting her 1% per year. Right? She was fearful of doing this on her own. But after doing it, and she is still coming every single week. We talk to her every week. Right? She's no longer afraid. She had 60% winning trades. She's doing 8 times better than her money manager, and she was able to fire the money manager and do it herself. She's having confidence and having fun. All right? So again, it's $245. If you are in, before we do the Q&A, right? I'm going to stick around. My teammates are here as well. I'll stick around and answer your questions. But before I get to your questions, if you are in the chat box, just type in 2 words, I'm in. We'd love to welcome you to this group. We've got a great community of people. It's like our own little tribe of people who are the successful investors out there. You're no longer going to be an average investor. Join the group, right? You're not really it's not like you're a full. Somebody asked, is there a commitment after this, right? No, you're joining. It's a course, right? So you're not locked into anything after the course. If you want to join something afterwards, if you want to use VectorVest afterwards, great, right? There's no commitment afterwards. You will become a better investor. Tien says, I am in. Brett, Tim, Serge, Rich, Cliff, Bob, Dan, Darren, I love how you typed in, I am in, I am motivated. We love to see that. We loved that attitude because that infects everybody else as well. When you come to the coaching webinars, when you have that type of attitude, it lifts everybody else up too. David says, I'm in. Anthony says, I'm going to jump to Q&A in just a second because Anthony's got a great question. Before I do, those of you who are in, please check your email because you should have gotten a welcome email from us with a link to the course. You can jump in tonight and start going through it. Todd and I will meet with you live, not this coming Wednesday, the Wednesday after that. All right? But you have all of this time to go through the course, the quizzes, the homework assignments. You can download the checklist. You can get going. You can go through the whole thing in the next few days, and you can decide to spend your weekend going through it, and you'll be ready for next week. All right? So welcome aboard. If you're in, check your email. You'll have a link to get into the course right away. All right, so I'm going to put a little flag on my screen starting right now and answer any question that comes in from right now. So Anthony says, is this an elite member price? The $245 is lower than elite pricing. Elite pricing is like $247 something. So it's a little lower than that. So the $245, it's a better deal for you. Okay? Bernice, does the course apply to Australian data? Yes, we've had a ton of Australians take this course. All right? Yes, it definitely does. The techniques we teach we actually, one of our most vocal students, her name is Andrea. She still comes every week to our coaching sessions. She's from Melbourne. All right? She goes through it every single week. She took the course. Yes, it applies to people in Australia. Mark says, I'm not sure that I must have missed the first part of your question because you're asking about something with 60 days. I'll let one of my teammates answer your question, Mark. Daraj says, what's the elite member price? Elite member price is 50% off the regular price. All right, so the regular price is $495. So half of that is like $247.50, I think, if I do my math right. All right. So the $245 is lower if you order right now. Ahmed says, I'm in. Welcome, Ahmed. Bernice, you're asking us to do too much math. I don't know what $245 is in Australian dollars. Darren says, I've not received the email yet. I'm sure it's coming. Double check, Darren, your spam folder or your junk folder. I don't know what your email address is, but different email providers do things differently. I know Gmail is really wacky. They've got all these different folders. Just double check them all. The other thing you could do, Darren, is just give our team a call, maybe tomorrow, and say, hey, I haven't gotten my welcome email. That way the phones have died down because they're probably busy right now, and that they will manually send it to you. Stan says, I missed today. Can I join tomorrow's? Yes, you can join tomorrow. Bernice, how much to get the VectorVest course after you've completed the course? Bernice, how much to get the VectorVest course after you have completed the course? I just want to make sure I understood your question. I'm still not sure I understand it fully, Bernice. If you've already taken this course in the past, you're an alumni, and you can take this course for only $95. All alumni, we sent an email to yesterday, and we'll send another email to you, I think it's over the weekend, with a link that'll give it to you for $95. Or you could just call our office, or you could email. Send an email to support@vectorvest.com and let them know you believe you're an alumni of the course and you want to take it again for $95. Wow, look at all these other I'm ins that just came in. Jeff says I'm in with like 3 or 4 exclamation points. Welcome, Jeff. Daraj says, I just signed in. Mark says, thank you. I say you're welcome. Maxime says, I'm in. Welcome aboard. Darren says, I'm in my portal and see the course. Welcome aboard, Darren. All right. Anthony says, I have to go to vectorvest.com/TSIC to order. Yes, we put a link in the chat box. It's www.vectorvest.com/TSIC. By the way, the TSIC stands for the Successful Investor Course. All right. Serge, yes, it is US dollars. Alfred, we will see you at the course as well. Welcome aboard, Alfred. Maxime says, I got the welcome email. Awesome. That's great to hear. TN says, I've not received the email from VectorVest. Same thing I said earlier. I think it was to Darren. Double check your junk or your spam folder. Or call our office and let them know you haven't received it, and they'll manually send it to you. James, if you want to continue with VectorVest after the 60-day period, there's different things you could do. Actually at the end of the course, we're going to give students a special discount on continuing with VectorVest. Like, it's really discounted, but just the base VectorVest services are like either $69 a month, $89 a month, or $129 a month. But there's going to be a really good deal at the end of the course. But again, those of you who are thinking about signing up, keep in mind, it's not mandatory. You can take this course and you're going to learn how to be a successful investor. Even if you go and use outside tools, we're going to show you how to use the VectorVest tools if you want to use them while we go through the course, because we feel it'll make you a faster, smarter, better investor. Okay? Dan says, do you have access to the recordings for a limited time? Yeah, you'll have access to the course for a full year, so you have plenty of time to go through it. Clayton says, what is the Quick Start course in the program? It is we actually started building a Quick Start course, I think back in 2015. All right. And it's on the training tab within VectorVest. Think of it like skipping a rock. Like, you skip a rock and it like just touches on the key points of the things you need to know. It'll take you about 90 minutes to go through the Quick Start course. The full course that we're looking at here spends about an hour on each of the 6 modules. Okay? But you can get to the Quick Start course in the training tab in VectorVest. Dennis, this is totally different than the Financial Freedom Summit. All right? It's like apples and oranges. You can't even compare the two. Financial Freedom Summit is a whole bunch of different independent webinars on different topics, whereas this course is a step-by-step plan to achieve a goal at the end. Dolores says, when will the course be offered again? I have no idea, Dolores. Honestly, we haven't scheduled it, our 2021 calendar out, but I can tell you this, Dolores, we're not going to do this course like this with all these live sessions again this year. All right, so it'll be sometime in 2021. Remember, Dolores, you can get the self-study version of it throughout the year for $495. The downside is you don't get the bonus of the live sessions with me and Todd every Wednesday. So it's available, but it's a little bit more money, and you don't get a certain bonus. Casey says, how many hours per class on each Wednesday for 6 weeks? Todd and I have let me back up a second, Casey. The modules, the recorded modules are about an hour to an hour and a half each, depending on the module. All right. When Todd and I get together with you on Wednesdays, we are there to help you. We're not there to teach you brand new content. We are there to help you implement what we taught you in the modules. So we have a basic philosophy of sticking around for as long as necessary to answer all the questions. All right? Which typically means Todd and I are there for like 90 minutes to 2 hours for however long you need us there. Dennis says, I'm registered for the Financial Freedom Summit. What's the difference between the... like I was saying, I'm sorry, Dennis, I already answered your question earlier. Hopefully that helped. Brett says, the VectorVest tools that have the monthly fees you mentioned is the software with the flags. I'm not sure what that means. When you log into VectorVest, there are flags that you might say, oh, I want to log into the US version. Yeah, so it does have a flag. Paul says, what's the cost to use VectorVest after the course is completed? Well, it depends on what you sign up for. Like I was saying a moment ago, at the end of the course, we're going to give you a really discounted price to continue with VectorVest. But if you just sign up for VectorVest like off the street, like if you just happen to see VectorVest, it's either $69, $89, or $129 a month. All right. Sarah says, I'm in now. Welcome aboard. Great to have you. Julia says, my CIBC bank never allows me to proceed such a sum of money. My credits are excellent. I'm not sure how to help you, Julia. Maybe if you call our office, somebody can talk to you about it over the phone. That's something that's beyond my capability on this webinar. Ronaldo, if you're currently on a trial, what our system would do is kind of just restart that with the 60 days. Now, if you know that your trial expires tomorrow or in the next couple of days, I do recommend that you call our office just to make sure that that happens. Bernice says, is this course offered with Australian data? Well, we will give, if you live in Australia, we'll give you access to the Australian product. Now, the exam, when we put up a stock chart in the course, it'll be using a US stock, but the principles are all the same. Now, when we talk about market direction and market timing, we will individualize that for the Australian market, just like we do with the Canadian market. But all the techniques that we teach are pretty universal. Julia says, can I call now? What's the phone number? The phone number is, I'll put it in the chat box. It is 888-658-7638. Now that works in the US and Canada. All right, so it's 888-658-7638. All right. Now, if you're outside the US, I don't have all the other numbers memorized, but we have toll-free numbers for different parts of the world. All right. I'm going to give you one last chance to ask any other questions that you might have. One last chance. All right. Well, why don't we do this? Let's wrap things up for the night. We are really excited to begin the course with you. And the first live session where Todd and I will get together with you will be not this Wednesday, but the Wednesday after that. So you have basically, what is that? 2 weeks to kind of go through the recordings and the training and the action items and the tests and everything, and write down your questions, take your notes, and then bring them to us on that Wednesday. Now, when we get together with you each Wednesday, we're going to go one module at a time. So on the first Wednesday we get together with you, we're going to say, all right, let's focus on Module 1. The next week, we'll say we're going to have a focus on Module 2. Okay? Darren says, I got one last question. On the mobile version, can I see the EPS chart? I believe so. I haven't used the mobile version in a bit because I'm pretty much sitting at a desktop all the time, but I'm almost positive you could put the earnings on the chart. You might have to tap a couple of things. If you call our office, they should be able to walk you through it. Plus, the other cool thing is, Darren, is every Thursday, Patrick does a Facebook Live where he uses the mobile app and teaches from the mobile app. So if you haven't checked that out, check it out. I believe it's every Thursday, either at 11, I think it's 11. It's either 11 or 11:30. I'm pretty sure it's 11. Okay? So yeah, just go to VectorVest's Facebook page, and you should be able to see it there. And Isan says, EPS on the app, you can do it. I just don't know the tap-by-tap directions. Thank you, Dolores. You guys are awesome. You guys are like interacting and helping me out on the webinar. So thank you, Isan, and thank you, Dolores. Dolores says the Facebook Live is at 11. Okay? All right. We will, Todd and I and John, we will see you all in the first session. Have a great rest of your night. Or if you're in Australia, have a great rest of your day, and we will see you at the first session. All right? Take care, everybody. Bye.